Okay, our next speaker is Mark Zepner, Managing Director of Ramelius Resources. Mark qualified as a mining engineer from the world-renowned West Australian School of Mines in Kalgoorlie. Prior to joining Ramelius, he had already more than 15 years' experience, including senior operational and management positions at WMC and Goldfields at both gold and nickel mines in Australia and offshore. He joined Ramelius as COO in 2012, became the CEO in 2014 and was appointed Managing Director in 2015. And during his time at Ramelius, he's expanded to 6 mines and 2 production centres, culminating in a strong new mine plan released to market on Monday. So please join me in welcoming last year's Digger of the Year to the stage, Mark Zepner.
Thank you, Digby, and thank you to Diggers once again for the opportunity. And I appreciate actually being able to sit on the panel this year, as opposed to being banished down the front row for to make way for the Bill and Rail show. As you mentioned, Digby, on Monday, Ramelius released its most extensive mine plan to date, a total of 1.8 million ounces over a 9-year period, backed up with a $32 million exploration budget, an active M&A focus, with a plan to grow further in the future. Ramelius is an Australian gold growth story, and this is supported by a track record over the past 6 years. Although today, I'll obviously focus more on the mine plan itself. Please read this qualification at your leisure. It's available on our website along with all of our previous presentations. If I may start with the corporate overview. Market cap 1.4 billion or thereabouts, with a healthy cash and gold balance of 234 million, made healthier on Monday by the announcement of the sale, $30 million sale of our Kathleen Valley project royalty, giving us a pro forma cash and gold balance of 264 million. We also paid down the final 8 million of our finance facility at the end of June, leaving us debt-free. The share register is around 60% institutional, with about 60% of that offshore, and we have improved our broker coverage significantly over recent years, now up to 9 analysts covering the stock. We produced record annual gold production in FY21 of 272,000 ounces, up on last year's 230,000 ounces, and this continued growth is due in no small part to an experienced and focused management team, well supported by a highly effective board. With ASX companies such as Ramelius, more and more has been asked in terms of sustainability, and we are stepping up to the plate in this area also. The facts and figures you see here are actually last year's. We're still working on this year's, but the 4 key pillars remain. Firstly, our business, and our business is strong as we recognise that without it, sustainability simply isn't possible. We are committed to our people, ever so critical in this COVID-19 environment. We have active and positive relationships with the communities in which we operate and contribute significantly, directly and indirectly, to those communities. And we are ever mindful of the need to minimise our impact on the environment wherever possible. We've done some excellent work recently in the WA wheat belt, where, as you could imagine, there are different requirements as opposed to somewhere such as the Murchison. I mentioned at the beginning Ramelius is a growth story, and I think this chart captures that. Gold production is yellow bars, realised gold price is the green line, and all-in sustaining costs the orange line. We've seen plus 20% year-on-year production increases over the period from FY15 to FY20, along with an expanding margin between the price and the cost of production. We've delivered a further 18% growth in production in FY21, with the all-in sustaining cost coming in at a very competitive $13.17 per ounce. This has resulted in the margin above all-in sustaining costs increasing from 20% to over 43% over the period in question. In FY22, even with a step up in all-in sustaining cost, due partly to production mix and also due to COVID-related impacts, we are expecting to maintain our margins before we see margin expansion again in FY23, which I'll get to shortly. Our clear strategy is to continue on this growth path as we believe that this will result in the best return for shareholders. The mine plan itself we released on Monday. We have established a solid 7 years of production with a low-grade tail out to year 9, targeting a 250,000 ounce per annum production level. Yellow is Mount Magnet Production Centre, orange being the high-grade Penny project, blue being the Edna May Production Centre, with Edna May Stage 3 highlighted separately. This plan is 27% larger than previous, and when you combine this 1.8 million ounces with the 1.37 million ounces already produced by Ramelius from Mount Magnet and Edna May, you're looking in excess of 3 million ounces of production. The first 4 years of the plan consist mainly of ore sources already in production, plus our 2 new projects at Tampia and Penny. The years from FY26 onwards consist more so of our new mining study-related projects such as Edna May Stage 3, Galaxy Underground and Eridanus Underground, forming a baseline of lower grade production around 200,000 ounces per annum, upon which we will look to add high grade extensions from our existing assets, similar to what we have been able to achieve over the last 5 to 6 years. And here at Ramelius we build high confidence mine plans, driven mainly by ore reserves and indicated resources, with just 8% of inferred resources included, indeed lower than the 12% we included last year. A large amount of the ore reserves sit in the first 4 years, as you would expect. And once again, we've provided plenty of supporting detail for the mine plan. It is here you can see the all-in sustaining cost range by year, with the average for the first 7 years a very competitive $1,390 to $1,490 per ounce. Perhaps more importantly, after rising in FY22, the all-in sustaining cost is forecast to drop in the years FY23 to 25 after the Penny project hits full production, which will result in substantial cash flows. Capital for all key projects is included, with again Edna May Stage 3 itemised separately. Exploration of $32 million for FY22, as always, is aimed to contribute to mine life extensions and deliver a rolling plan, which we often talk about. And how does it compare to last year? As you can see on the left-hand side graphic, we put the 2 plans side by side, FY20 in yellow, FY21 in green. There's higher production for a longer period, stronger for longer, as they say. If you look at the waterfall chart on the right-hand side, you see where the increases come from, and in size order, it's Edna May Stage 3, Galaxy Underground, and then the undergrounds at Eridanus, Shannon and Vivian. And now for some mining study and project updates. I'm sure you'll be familiar with this map. It shows our 2 production centres, Mount Magnet and Edna May. The arrows show that we feed high-grade sources in to complement the generally lower-grade baseload feeds at each mill. We have Vivian to the north. Sorry, I'll catch up. We have Vivian to the north, despite the distance, has been one of our most profitable ore sources due to its high grade. We also plan to truck the even higher grade ore from Penny to Mount Magnet once the project is fully developed, thus the dotted arrow. At Edna May, just outside the township of Westonia, we're already bringing ore from Marta to the north of Southern Cross and have recently commenced trucking Tampia ore from near Narrabeen in the south. Our assets are located close to major regional centres and haulage routes, and we have well-established infrastructure in place and operating well. It is this use of sunk capital that underpins a key part of our operating strategy. At Vivian, well, she's had a new lease on life. Whilst we originally contemplated completion at Vivian in October 2021, we've been able to add 2 full years with drilling at depth currently underway to potentially extend this even further. Vivian is one of Ramelius's success stories, a tenfold return on the original $10 million purchase price, and with the original 101,000 ounce reserve looking like being at least 270,000 ounces, we've seen an increase of some 166%. As mentioned, we have potential to extend, with the east or hanging wall lode becoming more meaningful at depth, with the blue holes representing east lode drilling and the green holes probing the potential for depth extensions on the main lode. At Mount Magnet, the Galaxy Underground will be our next underground ore source. We actually mined the open pits you see here in brown between 2012 and 2018. But the teams identified that we could bring Galaxy in ahead of Eridanus underground, given the Eridanus open pit has still got 1 to 2 years to run. Our mining study timetable originally contemplated a December completion for the Galaxy underground, whereas we've been able to complete a scoping study that contemplates accessing the ore bodies from the historic Hill 50 decline before splitting into separate declines for Mars and Saturn. The stope designs shown here are currently to a depth of 400 metres only. The banded iron formations at Mount Magnet traditionally have excellent depth continuity, so we may well be looking at a long life operation here. On to Eridanus. We're continuing the stage 2 pit started last June. The area between Eridanus and Franks Tower to the northeast has only been relatively shallowly drilled. It's some 2 kilometre trend, that is. Despite this, we already have almost 1 million ounces in resources and have effectively completed scoping studies on Eridanus underground, as well as some oxide pits at Orion and Franks Tower, all 3 of which are in the mine plan. The Eridanus underground is a bulked up, lowish grade, long hole open stope with rock fill option, which is our best option currently, whilst we do not have the close space drilling to be able to demonstrate high grade continuity required for more selective underground mining. We are continuing our drilling mainly to the east and continue to hit mineralisation, as shown in recent drill holes, which we're waiting on full results. But one of those results we're waiting on is a 1 metre quartz vein with visible gold. This project simply requires more drilling and deepening of the open pit to increase our geological understanding. At Penny, we remain on track to bring one of Australia's highest grade gold mines into production in FY23. Here we have a 14 to 15 gram resource reserve, which gives us an all-in sustaining cost in the low 600s, which as mentioned, has the ability to impact on overall group costs from FY23 onwards. We have all approvals in place. We've brought forward some capital in an attempt to bring production forward as soon as possible. Some of this capital you can see with the initial construction of the camp. Most of our key contracts have been awarded, and shortly we'll be commencing open pit mining and also opening up for tendering for the all-important underground contract. At Edna May, our work on the Stage 3 open pit is ongoing. We have a large resource there, again 1 million ounces at about 1 gram. And our January 2021 scoping studies points to a large low-grade pit with significant ounces and life, but also with a decent capex requirement. As flagged in our mine plan release, where we do go into some detail, recent market volatility on pricing, both construction and mining, has presented some challenges in pinning down the optimal pit shell as part of the feasibility study process. Now, I believe this will be our last crack at another cutback. I don't think I'll be talking about a stage 4, and therefore we need to take whatever time it takes to get it right. We have completed some sections of work as part of the pre-feasibility study, but we yet haven't drilled the Golden Point area, which is top left, but we are planning to start doing that in the next month or so. Our newest project that's been brought into production is Tampia, where we spent a large proportion of FY21 preparing the mill at Edna May, gaining approvals, buying farms and building a camp on the outskirts of Narrabeen. Through our mining contractor Macca, we were able to commence mining in late April. First ore was mined in June and the first truck was sent to Edna May on the 1st of July, precisely as scheduled. Importantly, in the tight labour market here in WA, we're almost fully manned up, with a number of mine personnel moving from our Greenfinch project up at Edna May as that pit wound down towards completion. I'd now like to show you a short video of our Tampia mine, where we are truly coexisting with farming. As you can see, it's been pretty wet out there. So despite another excellent year in FY21, what makes Ramelius still a good investment? Well, part of it is in the inherent value or the organic growth potential that remains within our mineral resource inventory, which totals almost 5 million ounces. We have rejigged our mining studies. Some studies have been completed and some have been pushed back. Sometimes that's the way it goes. But the team are also keen to look at completing initial studies on the historic Hill 50 mine and the Morning Star ore bodies, which haven't been looked at for a number of years. And the second part of our investment case is the excellent returns that we have delivered on our inorganic or M&A growth projects, right back to the early days of the company. What you see here by project is where we're showing the purchase price in blue, the cash generated in yellow, and the net cash being the red dot. We have a nice trend established here with increased sized investments over time, but for larger and larger returns. Vivian, Edna May, Marda, and now Tampia are all in production, and we are very confident of generating excellent returns from our our Penny and Tampia projects as well. Our balance sheet remains such that it allows us to consider new opportunities as and when they arise. Now, to summarise our FY22 focus areas, we will continue to strive for operational excellence by achieving guidance, managing costs and improving our safety record, as well as ramping up to full production at Tampia. We are committed to significant investment in exploration and continue to believe in the ground that we hold. We're always on the lookout for accretive acquisitions, ones that will deliver a step change for the company, and we believe we are well placed to capitalise on the right opportunity. We'll continue to manage our capital in a disciplined manner and retain a strong balance sheet while recognising that dividends are also an integral part of any shareholder-focused company. And we'll continue to provide regular updates to the market on our progress on our mining studies, as well as the move towards production at Penny. And finally, I can use this photo one last time as a digger of the year, given that we'll be superseded later tonight, even though I feel slightly shortchanged given that it's only been for 9 months. Thank you for listening to the Ramelius story.
Well done, Mark. So we've got a question online here. Can you please tell us how the exploration is proceeding at Penny and the chances of significant increases in resources?
We have done some pretty early stage work at Penny. A lot of the initial drilling when we acquired the project was really confirmatory. That plays to our strengths, where we focused on the Penny North ore body, metallurgical test work, geotech work, and pinning down the extremities of the ore body. It's only in recent times that we've done some step-out drilling and following that up with geophysics. And I think this financial year will be telling. It's exploration. I suppose 2 years ago, no one knew Penny North existed, so we're hoping to find a Penny North, or we'll come up with a name for it. We'll find it first and we'll worry about the name second. Exploration has been a key part. It's probably been an undersold part of Ramelius' story. We've been able to extend almost every ore body that we've started mining. Like I said, a lot of that's gone under the radar, and it's those incremental additions that have really been the foundation of our growth.
Okay, thanks, Mark. And a question from Canaccord Insto. So the new mine plan has given you much more certainty over a longer production profile. How do you allocate capital from here, call it growth versus dividends?
I think I've learnt that you have to be all things to all people. No longer Goldies can just focus on share price growth. You've got to look at dividends, and we've been a dividend payer now for the last 2 years. And I'd like to think that we're in a position where we can self-fund our own internal projects, retain sufficient funds to pay a dividend that's meaningful, but also retain firepower to go after M&A and inorganic growth as well. So I'd like to think we can do, and that's without even going into our debt carrying capacity or our ability to go to the market, which we haven't had a habit in doing, but we will do if we need to.
Okay, are there any questions from the floor for Mark? Okay, one final question then. Where are you allocating your exploration spend in fiscal 22?
The 32 million, not surprisingly, 14 million of that or so is at Mount Magnet. Mount Magnet's the gift that keeps giving, 6 million ounces over 100 years of mining. But we are finding new types of ore bodies. That's the exciting part of the Mount Magnet story. There's sort of 4 million or so at Penny, and then it just grows down there, Vivian. But there's a bit at every project. But Mount Magnet's, the most prolifically endowed area, and that's where we're spending most of our dollars.
All right, well done, Mark Zepner. Thanks
you.
for joining us. Thanks, mate. So just quickly to make an announcement on behalf of the conference organisers, please note that lunch is commencing at 11:50 this morning. It's absolutely essential that all booths in the main marquee are emptied prior to the team being available to commence construction for the dinner setup. So thanks very much. We'll see you at 10:20 for the next presentation.